Hey Blake,
Hello,
nice to see you.
how's it going?
Very good. I feel like I didn't give you the Zoom link early enough. So sorry about that. But
It's all right. Sorry
if
I'm
you're,
late.
no, you're good. If you're cool with it, I'll just let people in. Right now we have 10 people and they'll probably filter in within the first like 20 minutes, I would say.
Okay.
Um, but oh, last question. Did you want to share your screen for that simplified slide deck that you mentioned or no?
I didn't know if I should proceed with that or maybe I was expecting to hear back from you, so I don't have any slides
Oh, I'm
on
sorry.
this. That's all right.
Okay, that's great. So I don't think we need them. If I need to, I'll just share the more intense slides, but I think we can talk through it. All right, cool. Hey everyone. Since we are starting a second after the hour, we're not doing music, but if you want to, sing some music in your head, feel free to. We were going to do Money by Pink Floyd, which would have been very fun as well. But we'll save it for another talk, Blake. But just as way of very short intro, Blake here is our speaker. And I'm actually very excited because there's not a ton that I know about the space. And in our first call, I learned a lot. So excited to go deep with you. You've done a lot of different things. So where we're going to focus today is Clean Energy Credit Union, right? Nonprofit banking in the transition. You also have run a employee-owned cooperative certified B Corp solar company for a very long time called Namasté Solar. You're part of an impact fund and part of another solar cooperative. So you do a lot of different things, which I think is great actually in terms of going pretty deep in this space and why you do this in particular, why you spend some of your time here as well. And then the other, I guess, context in terms of who you are and how this conversation came about is that we had a small group of folks, including Kevin Chow, who introduced us, talking about how do we help finance smaller solar projects, right? Or smaller renewable projects just for lower income people in the US. Can we group them together? Why does that not work? Why does that maybe work? And one of the major things that we came out of the conversation thinking about was just nonprofit banking, right? Like, how do we actually use that to our advantage? And so, context, I guess, but first, just thank you for being here.
Yeah, thanks for inviting me.
Of course. Okay. So I think I'm going to start with my really rudimentary understanding of what Clean Energy Credit Union is. And then my hope is that you will correct any place that I'm maybe wrong and then expand on it in whatever ways make the most sense. So my understanding is that all of us have money in banks, right? Or we have some sort of relationship with a bank, and we might have savings in a bank, and then that helps the bank do things, right? They can loan against that money. And if we care about clean energy, right, we might want those savings or that money to actually go to work in some way. And so we could, and I don't know if everyone can, right? But if we have access to doing this, maybe geographically or whatever the sort of limitations are, we could put our money into Clean Energy Credit Union, and you all would prioritize or maybe only do loans to then help people afford clean energy. And then the other thing that I think is important that I don't think I ever realized a credit union is a not-for-profit democratically owned bank generally. Like I just didn't know that. And then, a normal bank, Bank of America, whatever, Chase, they exist to make money for shareholders, but it's just a fundamentally different process for credit union. So did I get all of that right? And then what are the other important pieces when thinking about just a credit or thinking about clean energy credit union in particular?
Yeah, you get it right. But part of it too, though, is if somebody wants to get a loan for a green home improvement, or they want to get a loan to put solar panels on their roof, uh, out of the 10,000 banks and credit unions throughout the United States, only a handful of them actually provide a loan that's specifically for a green home improvement, or specifically for heat pump, or specifically for solar. So part of the reason why we started the credit union 7 years ago was because those types of loans didn't exist. And the ones that did were only from venture capital backed fintech companies, and they were
Hmm.
charging an arm and a leg for it. And we thought, well, if we got to, get more people to put insulation in their attic and to buy heat pumps and to electrify their homes and to go solar, we've got to make it cheaper. We got to provide cheap financing because these improvements, these projects cost 25 to $50,000 or more. And the only way that's going to go mainstream is if there's cheap financing. So part of it was being able to provide loans that are real as cheap as possible.
Mhm.
And nobody else was doing it. And we actually knocked on the doors of dozens of banks and credit unions saying, "Will you please create a new loan product for this?" And none of them wanted to, or they thought it was too risky, and therefore the interest rates were going to be too high, things like that. So part of it was creating good loan products that were really going to help move the needle and make this more affordable for more people. And then the
Mhm.
other part of it was like what you said. Like I'm an enviro geek. I'm a clean energy geek. I want my money to support, at least not be doing bad, right? If my money's in Bank of America, it's supporting the financing of billions of dollars in fossil fuel projects. So I would at least like to do some neutral banking, if not positive impact banking. And with
Mhm.
clean energy trading, I know that my money is federally insured, just like it would be if it were at Wells Fargo or Bank of America. But my money is only used to help somebody else get a really affordable loan to pursue their clean energy or energy saving project. And that feels really good.
Awesome. So I'm going to ask you to do maybe a hard thing, maybe an easy thing, is to essentially walk me through where we were 7 years ago when this was started to where we are today, right? And maybe there are sort of milestones that you want to talk about, but it sounds like 7 years ago, no one else was doing this, right? Because it just seemed too risky. When, if any time, did it seem less risky? When did government start getting involved? And how did your role, your meaning the credit union's role, how has it shifted? And if so, in what ways?
Yeah. So the process actually started 10 years ago. And at that time, yeah, the only groups that were doing it were VC-backed fintechs. There
Mhm.
were a few local like credit unions, particularly in California, where the solar revolution started happening early, but they were niche, they were small, it wasn't nationwide. And it took us 3 years to get a federal charter. We thought about starting Clean Energy Bank, found out credit unions are cooperatives and wanted to go that route and starting clean energy trading, but it took us 3 years to get a federal charter. And part of the challenge was the regulators didn't understand what we were trying to do. What you're only wanting to do clean energy loans, that sounds really risky.
Mhm.
They wanted us to charge higher interest rates, and so a big part of it was getting them on board and showing them actually these loans are lower risk,
Mhm.
not higher risk, because if you have solar panels on your roof, it lowers your electricity bill, and it usually lowers your electricity bill by more each month than what you have to pay in your loan payment. So it can be cash flow positive for the people who are living there. Same thing with the green home improvement. Same thing with an electric vehicle loan. It's just less fuel costs, 1/10 the number of moving parts, way lower maintenance costs. These loans are actually less risky, but we had to prove it. So
Mhm.
what's happened over the last 7 years since we made our first loan is
Mhm.
that we've done over 250 million in loans, over
Oh.
13,000 of them, all throughout the United States. More than half of our members, more than half of our borrowers are low income. And we have, I want to say, less than 20 defaults, which is amazing. So to take a loan portfolio of 13,000 loans totaling over $250 million dollars and only have 20 defaults, that really got the regulators' attention, but it's also gotten the attention of other banks and credit unions. And so what you've seen is particularly in the past few years, we've been able to help spread the good word, so to speak, by setting a positive example to get other credit unions, other banks interested in these loans, to convince them that these are lower risk than they thought, well-performing loans. It's a new asset class that helps them diversify what's
Mhm.
in their loan portfolios. And so we've helped, I want to say 75 to 80 other credit unions to learn about clean energy lending and to get into the clean energy lending game. We've helped to set up training programs for loan officers and for employees of those credit unions. And then I think just by virtue of setting a positive example and speaking at every conference that we get a chance to speak at, where there's bank and credit union employees, I think that's helping to get the word out. Now we're not the only ones working on this, but I think with our pure play, with our narrow focus, we're kind of poster child, so to speak, of when something like this needs to be talked about. They ask us to be on the panel, and we're very very eager to do so, so we can help talk about it to the right audiences of bank and credit union people.
Yeah. Are you guys still, so I'm guessing you were the only pure play clean energy credit union when you started. Are you still the only one?
To our knowledge, yes.
Got it.
Yeah.
Okay. And I think
Is
that's
it,
a point. Oh, go ahead.
well, I mean, I would love to give props to some other banks and credit unions that are doing this kind of thing. So, like Beneficial State Bank, based in California, it's owned by a nonprofit foundation, And they do solar loans and electric vehicle loans, but it's not all they do. They also do a whole lot of normal loans, and they're a certified B Corporation. So I'd say that is an exemplary bank doing things in a wonderful way, but they're not pure play, right? Amalgamated Bank is a certified B Corp bank based in New York. They do solar loans and other environmentally friendly things, but they also have a whole lot of normal loans. We've seen some good credit unions like Vermont State Employees Credit Union, which I think is recently rebranded. They do a lot of solar loans, but again, it's a small portion of everything else that they're doing. There's a new bank called Climate First Bank that got started in Florida, and actually the investment cooperative that I co-manage is an investor in Climate First Bank because we really like what they're doing. As the name implies, they're trying to do things that are all very climate friendly. However, when you look at their portfolio, yes, there are a lot of solar loans, but there's also a whole lot of normal real estate loans in coastal Florida, which you could argue are, at high risk of climate change and other things like that. So there's, we're excited by this progress because 10 years ago, that wasn't the case. But in terms of pure play, yeah, I think we're the only ones that have the claim to being pure play.
Cool. So $250 million in loans, 13,000 loans, half low income, which I think is amazing, and a 0.1% default, I think, if I did the math right.
Way lower than that. Yep.
Okay, there we go. So really low default. And it was 0.001, but I did 0.1%. So very low number.
That's an important zero.
Yeah, exactly. Exactly. And so let's take a step back to on the actually I'll do a couple rapid fire first. What's the interest percentage and has that shifted at all since you all started?
You mean like the interest rate of
Yeah,
the
I mean maybe it's
loans?
different for everything, but let's say like for a solar project, is there like
Oh,
one interest rate or is it different in
it,
general? Like how
it
does
it's
that?
different.
Okay.
In general, interest rates are higher when it's a
Mhm.
longer term loan, and we offer 20-year solar loans or a 20-year loan for a geothermal heat pump.
Mhm.
Those do have slightly higher rates than a 12-year solar loan or a 12-year geothermal heat pump loan. Or if you're getting insulation in your attic, you might only need a 5-year loan, and those rates can be lower. So all the rates change based on the product, based on the length of time, and sometimes they do change based on credit score. We're
Mhm.
trying to move away from that, but if someone has a low credit score,
Yeah,
the perception in the conventional banking industry is that person is higher risk, and therefore you need
Mhm.
to charge a higher interest rate. We're trying really hard to go against that, but yeah, the interest rates are different for the loan product, for the project type, and for the term. But rates have definitely gone up since we started. I think the rates for our first solar loans were like in the fours. Now they're more like in the fives and sixes, just because interest rates have gone up industry wide.
makes sense. Cool. And then I think I want to talk some landscape questions. And I think everyone here knows drop questions in the chat and we'll get to them in the last 15 minutes because I won't be able to cover all the areas of interest during this. But I want to go wide and then I want to go deep in this first 45 minutes. So we're still in this sort of wide space. And so let's talk about like the larger landscape. So there are traditional banks. There, at the time were sort of VC-backed fintech companies that had really high interest rates. And then you all came along, and then there's government, right? Like I live in New York, and I think that New York State offers some of these loans. You might have to
Mhm.
qualify. But when did government start coming in, and do you guys play with government? Like, what's the
Yeah.
landscape and the sort of working together that you guys do?
Yep. Yeah, the answer is yes. It started with us working with municipal governments.
Cool.
So, like the city of Boulder or the city of Bloomington, Indiana,
Mhm.
different cities approached us and said, you know what, we're going to try to encourage the residents of our city to get heat
Mhm.
pumps, to do green home improvements, to go solar, because we think that's good for the residents of our city. Can you please offer, your loan program to them? And we
Mhm.
can help to try to buy down the interest rate, or we can put up, do some risk mitigation in order for you to be able to provide better terms and lower interest rates. So we started doing those right when we started 7 years ago. And we even had, like Organic Valley as a cooperative saying, we want to help our farmers, to put solar on their barns, on their dairy barns, so that they can lower their utility costs and be, have a better chance at being a sustainable farmer. So
Mhm.
we did a bunch of those. Then you started seeing some states do it, and then state green banks started getting started. And then a couple years ago, the Inflation Reduction Act
Mhm.
passed, where it was going to be billions of dollars. It's some of the first climate legislation, federal climate legislation ever. And those billions of dollars, people were really excited about the potential. Fast forward to today, a lot of that money is frozen and it's gunked up in the current politics. But that really helped get the attention
Mm.
of a lot of state and municipal governments, a lot of lenders who are saying, "Oh wow, this really is a big market." You know, the federal government's going to put the billions of dollars behind it to help the market grow, and I think that really helped get a lot of lenders, a lot of banks, credit unions into the bandwagon. Hopefully, some of that financing will go through. At least that momentum will continue, even if some of those funds stay frozen. But yeah, governments have played different roles to different degrees all throughout the country in um, getting their constituents to be early adopters. You know, like there's California does a great job of promoting electric vehicles, and we're
Mhm.
working with them to help low income residents of California buy used EVs at great prices and at subsidized loan terms. It's a wonderful program, but there, I could name plenty of other states that aren't that proactive in trying to help their low income residents, transition to cheaper to operate, cheaper to drive electric vehicles.
Yeah. And do you all, so you're a nonprofit, can you give out grants? Is that part of it as well? Or,
We can't, partly because we're small. Yeah,
yeah.
I would say maybe there are multi-billion-dollar credit unions like Navy Federal
Mhm.
Credit Union that might be able to give grants, or that a lot of credit unions set up foundations.
Right.
Um, we're in kind of in the other opposite end of the spectrum where we're hoping to attract more grants so that we can grow the credit union's capability of providing more loans and grow our balance sheet and be able to do more of what we're doing. That's been our biggest constraint. We're 7 years into this now. We've proven the concept. Now we
Mhm.
just need to scale it, and we need more deposits, and we need more grant funding in order to do that. If we were a clean energy bank, if we were for profit, we could raise money from stockholders and from investors. But since we're a nonprofit, we can't do that. A credit union can't have a stockholder, so we need to raise money the way that most 501(c)(3)s do, and that's raising grant capital.
Why do you need the grants to be able to unlock more deposits?
So the regulators,
Mm.
one of the things they regulate are like capital ratios and making sure that banks and credit unions have enough of their own equity or net worth
Mhm.
uh, relative to all the loans and the deposits that they've got on their balance sheet, so that if some of those loans go bad, uh, it doesn't need to be bailed out. So let's say for banks, it's approximately 10 to 1. For every dollar in capital that they have of stockholders' capital or equity on their balance sheet, they can bring on maybe $10 in deposits. For credit unions, it's a little nicer than that because they trust the motives of credit unions is what I'm guessing, but it's about 14 to 1. So for every dollar in net
Mhm.
worth that our credit union has, we can accept $14 in deposits, and then we can lend out the combined 15. So that's bar napkin math, but at a high level, that's it. So we can't take on more deposits unless we get more either grant capital or we retain our earnings. But since we're such a young credit union, we've only been around for 7 years. We don't have a lot of earnings to have retained. Whereas,
Mhm.
say, Navy Federal Credit Union, which is billions of dollars in assets, they've been
Mhm.
around for 70, 80 years, and they've merged with other credit unions, and their balance sheet's really big.
Mhm. Okay, cool. Well, I want to maybe, because I'm learning a lot about just credit unions generally, and I think, anyone that can be helpful, I think should. And that's one call to action is the grant side of things. Let's maybe move into kind of the clean energy space, right? And like how to scale up the deployment, right? Because I think that's been such a big focus of mine and just of the IRA, right? It's just like how do we deploy what we know works right now as we're still working on technology that hopefully will come online. And so I guess one of the questions that I want to ask that might get to this, and maybe it won't, but like again, if we look at that 7 years, and maybe you want to take 10 years and you've been in solar for a very long time, but let's do 10 years. What were the biggest challenges that you saw 10 years ago, right? And obviously financing was one of them, and we've already sort of covered that, that are different than the biggest challenges today. And like what keeps you up
Hmm.
at night today that maybe didn't keep you up at night 10 years ago?
Yeah,
Go ahead.
and to maybe um, illustrate it a little better, I'll go back to when I got into the industry, 20 plus years ago. Back then, hardly anybody knew you could get solar panels on your roof. Hardly
Hmm.
anybody knew what a heat pump was. Um, there weren't. if you mention a geothermal system, people, what are you talking about? And electric vehicles were kind of non-existent. So some of it in the early days was just an awareness issue.
Yeah.
It was, did you know this technology exists? Do you know that it's affordable? Do you know that it can help in this way and that way? We've come a long way since then, and most people, not everybody, but has someone in their neighborhood that's got solar panels on their roof. Or now most people know someone who's got an electric car or an electric bike. You're seeing electric bikes everywhere now. That those didn't exist really 10 years ago. So that awareness issue, I think, is a good example of one that's been mostly solved. A new challenge to counterbalance that, though, that we didn't have 10 years ago, is now it's been highly politicized.
Mhm.
Solar, wind, clean energy in general used to be a bipartisan issue. It may not have been something that um, both parties were enthusiastically talking about, but you had wind very popular in Republican states, and solar popular in Democrat states like California and Colorado,
Mhm.
but nobody was trying to stop it. And in fact, if you did try to stop it, senators from Iowa would be really upset because they've got a lot of wind power, and that's very, very important to them. Now we're seeing something different where it's similar to, there's a lot of anti DEI sentiment. There's also some anti clean energy sentiment, and that is a understatement. That's a huge bummer. We want to try to stop that. And it might be slightly different for different technologies. You know, uh, with electric vehicles, the headwinds might be a little bit different than they are for wind, and might be a little bit different than they are for solar, because a lot of solar panels are manufactured in China, and those were some of the first tariffs that Trump
Mhm.
put in place during his first term. So those are two examples. I could come up with more if you'd like.
No, I think that's fantastic. And the thing that I'm struggling with is there's so many different directions I want to go with you. And I'm like, what is the most, what is the most helpful
Mm.
and specific and deepest that we can go down? And so,
Oh,
I
wait, I'm
think,
sorry. I think I should give one more example. That's maybe
please,
the blatant one.
yeah.
20 years ago, when I got in the industry, all forms of clean energy were way more expensive than they are today.
Hmm.
And luckily, there are countries like Germany and Japan that started promoting clean energy before the United States did,
Yeah.
and they kind of proved, like has happened with so many other technologies, that like when electricity was first available, when televisions were first available, when radios were first available, automobiles, really, really expensive, until you had enough, mass production volumes and economies of scale to bring down the costs. And so some of the early rationale for subsidizing clean energy by Japan and Germany way long ago was, if we can help the market to grow and harness economies of scale, the costs will come down. And what's great is today we can clearly see that huge decrease in cost curve
Mhm.
for all clean energy technologies, just about, as production volumes and as economies, as the scale increased. So solar, wind, electric vehicles, electric bikes, lithium ion battery technology, all those things are significantly cheaper than they've
Mhm.
ever been. And there've been some blips, like, okay, you put in place some tariffs, okay, that's going to cause prices to go up. Or sometimes there was, not enough manufacturing of solar panels. And in that particular year or two, until the supply demand imbalance, there's a little bit of an uptick. But in general, the cost curve has been way down, and we still have a long way to go in bringing costs down even further, I think.
Yeah. So we talked about three things. So one was cost curve, right? And economies of scale, positive. It's gotten a lot better. Second was messaging, marketing, positive. It's gotten a lot better. And just awareness,
Awareness, yeah.
positive. Uh, bipartisanship, right, of this issue, not good. I heard Nick Chatterjee talk yesterday. He was at FERC and was just like total Republican, and you know, was like this was not a bipartisan thing even like 5 years ago, six. I mean, maybe, but like it's just gotten so much worse more recently. Even though I think Texas has more solar, right? Like, or more
Yeah,
wind or
top wind producer in the country.
yeah, exactly. Which of these challenges, or is there another challenge that keeps you up at night, or that you wish you could figure out in terms of like in terms of financing, or maybe something else, right? In the sort of
Yeah,
world that you live in, that you just have not been able to figure out quite yet.
yeah. I think in my early in my career, it was helping bring clean energy technologies to developing countries, so that
Mm,
if they're building new energy infrastructure, don't do it the way we did it. Don't build uh, phone lines all over your country. Skip that and go straight to leapfrog it and go straight to cellular. And so, like, I spent 3 years in Nepal installing solar and wind and pico hydro and electric vehicle technologies because they don't have a lot of energy infrastructure. And I was like, oh, let's start off on a good foot with renewables. Then it was coming back to the United States and starting a solar company. It was wanting to install solar as responsibly as possible and train people. Like at that time, there weren't that many people who had solar experience. So fast forward to today, now there's community colleges and universities and all kinds of training programs for someone to not just learn to be a licensed electrician, but with a specialty in solar or specialty in wind, and the helping the workforce to be prepared for that. Whereas in the early days, our solar company had to pay for that ourselves. So it made the economics. That was another way in which it was less efficient, because if the companies are having to do their own training as opposed to hiring somebody who just graduated from a training program, they can hit the ground running on day one. Training uh, permitting offices. They'd never seen, a permit for installing solar panels in your roof. Now, most permitting offices can turn around a solar permit in a single day. So a lot of those things have come a really long way. But, you know, 10 years ago, when I was trying to identify the next challenge that I wanted to get involved in, it was the financing. So I've really dedicated, the majority of my time to trying to address that. And of course, it hasn't been solved. The box can't be checked yet. We've made a lot of progress, but for me, that's still my number one pain point, where I think I can play a role in helping out, and where clean edge creating can play a role in helping out. We still have a long way to go to make the financing, like think of today, if you go to buy a normal car, or if you're wanting to get a mortgage for your house, the competition is incredibly fierce. You get, if you do a Google search for car loan, all of a sudden you're going to be barraged, by paid advertising, because there's so many lenders that want to give you your car loan. We need it to be the same way. Like how I know that it's arrived with clean energy projects, it'll be the same kind of thing, where everybody's wanting to provide you a loan for that green home improvement, but or a good loan for your net zero energy home, or your green and energy efficient home. We're just a really long way from that. So we need more competition. And there's about 10,000 banks and credit unions throughout the United States, and maybe only 2 to 3 dozen that really are offering a good product for these types of projects, like a geothermal project or a solar project or a green home improvement project.
Yeah. So the challenge is actually having more competition at the financing level so that people have multiple options for loans. Is that what keeps you up?
I'd say that's a big part of it. The big part of
Cool.
it is the competition, getting the
Yeah.
regulators on board. So,
Right.
our regulators are regional, and credit unions and banks have different regulators. The regulators who've worked with us now
Mhm.
understand it really, really well. We need
Yeah.
to educate the rest of the regulators. That's just one other example.
Mhm.
Part of it is educating uh, consumers and
Mhm.
companies that have deposits. So bear with me here. Um, when I was growing up, one of the first things I learned about was being a conscious consumer.
Mhm.
You can vote with your dollars, and what are you going to buy? You can help support certain causes by, as a consumer, what things are you going to buy? Socially responsible investing. Um, you know, that started taking off 40 years ago, where people were like, well, at the very least, I don't want to invest in gambling and tobacco and firearms. I'm going to stop investing in those kinds of things. Today that has evolved into impact investing. I want to have a positive impact with the investment dollars that I invest in. You talk to any young person about careers. Most young people don't just want a job. They're like, I want a job that does good in the world, so I can have a positive impact with my career. One of the next frontiers, I think, is helping people to be aware that where you keep your savings and where you keep your checking account has a similar impact as those other things. Most people don't even think about that. Well, I got my money at Wells Fargo because it's super convenient. I don't realize that I'm helping to finance ongoing fossil fuel infrastructure build out, and other things. Insert joke here about Wells Fargo. Uh, so I think this is one of the next frontiers, and the next frontier after that might be, where do I get my insurance? Because insurance
Mhm.
companies have trillions of dollars, and they need to do something with all that money. While they're kind of waiting for claims to happen, they need to invest it. So I call it impact banking. um, Getting more people aware that where they put their money matters.
Mhm. Okay, let's so we'll open it to audience Q&A in 12 minutes. So please keep dropping questions. And I'm going to ask this question before we go into impact banking because I want to spend some time there. Uh, what is, again, going back to that context of like how we started this conversation was how do we de-risk or make smaller renewable projects more attractive to investors, right? And again, the answer was like probably Clean Energy Credit Union is doing a good job at that. And again, our idea was like maybe we pull them together and then maybe like a bigger financier will be more interested in that. Curious about your thoughts on that first. And then the second thing, which again might be related, is like, what are the hardest things to finance, even for you all, right? That you find or the credit union finds really hard to finance.
Yeah. Um, and there are multiple places where you can invest, make equity investments
Mm.
in solar and wind and heat pumps. There's companies that you can invest in that are trying to commercialize new technologies or bring new technologies to scale. So I don't want anybody to get the impression that I'm saying there's only one way to invest in clean energy. That's clean energy.
No, no,
There's
no.
lots of them.
But
Um,
but yeah, I think in this case, like focusing on that is great. So no
okay.
worries on not focusing on those
Yep.
folks.
Yeah. So, right now I'm trying to think. There are a lot of alternative electric vehicles, like experimental technologies, where we get a lot of people. Actually, it's usually the company that comes to us and said, "Will you provide
Mm.
financing to our customers so they can buy one of these from
Mm.
us?" Um, uh, there are a lot of new clean energy technologies that are coming out, but we have to be careful because it's got to be a company where um, it's bankable. The technology is going to be around 10 years from now. If a warranty needs to be honored, they can get that warranty honored. Like batteries, that might be a good example. We're seeing a lot more of our members ask for loans to
Mm.
get battery storage. It might be because they're in Florida and there's a lot of hurricanes. It might be in Texas with the utility going down. They want to make sure they have uninterrupted power. Or it might just be, solar folks who are saying, oh, if I got solar and I have batteries, I can save a lot more money based on the rate structures that are in California. And battery technology, it's come a really long way, but there's still, it's still a bit fragmented. It's not as mature. So evaluating those technologies and seeing what's going to be permissible for being eligible for one of our loan products is one example of an important thing that we're looking at. Um, I'm trying to think of what else. For us, a next frontier is wanting to provide mortgages
Mm.
for
Right.
homes, but our depositors and our members expect us to not provide normal mortgages. It's got to be a mortgage for a home that is uh, above a certain threshold in terms of its energy efficiency. Does it have solar panels on the roof? So one of the challenges we're going to have is how to define what that threshold is um, for qualifying for one of our mortgages, which will hopefully have lower interest rate than if you were to go and buy. Uh, there's two homes right in the same neighborhood. I'm looking at home A, and I'm looking at home B. Well, home A, it might cost a little bit more, but it's going to be a lot cheaper to live in. Well, if we can get them a cheaper mortgage and their monthly payments could be the same if they went and lived in home B, which didn't have any of those energy efficiency features, that's our goal, is to help make it easier to buy. Electric vehicles right now are more expensive than conventional vehicles, but if we can lower the interest rate or give better loan terms, we can help close the gap so that it can make it an easier decision for someone who's got a tight budget to go ahead and purchase that electric vehicle.
Yeah. It reminds me of so we're going to go into impact banking, which includes insurance, which I think is a fantastic point, which I haven't thought about, right? In the climate context, insurance comes up a lot because it seems like there's a crisis, right? And they're going to like totally be wiped out or no one's going to have insurance and all of that. But you make a great point that like insurance companies actually have a ton of money that they invest and that understanding where they invest is really important. But what you just mentioned about lower mortgages for this threshold of like efficiency and clean energy reminds me of parametric insurance that can go out or be paid out or be lower, I think, based on like people doing certain things that would maybe
Mhm.
reduce wildfire occurrences, right? If they're like,
Yep.
doing prescribed fires. So I think there's some similarity there. And Raviv Turner was the guy that we brought in, if that is helpful for you guys to talk, because I think there's something there. But then on the impact banking side, Bill McKibben, I think, has done a lot of work on just making it clear that, hey, like where your money goes really matters. And there's a whole divestment movement and I know you and Marilyn Waithe, who we're a big fan of as well, talk a lot about impact banking. And so let's spend the next 7 minutes, I guess, until we go to audience Q&A, to talk about like what do you mean by that, and what is like high purity impact banking is what you talked about.
Mhm.
What's your vision of like what that looks like? Like what's available to us? What do the businesses look like or the nonprofits? And as a sort of human consumer, what are my options in that world that you envision?
Yep. I, I think uh, there's different impact categories. We're staying focused on the environment and climate and clean energy. Is that right? Okay.
Yes.
Because there are
Yeah.
ways you can still invest in your local credit union, and it helps, invest dollars better than banks in your local community. Or there's, CDFIs, community development financial institutions, that help, focus on low income borrowers. So there's lots of different things that you can focus on with impact banking. But if we're just talking about the environment, clean energy, climate, so some of those financial institutions that I mentioned earlier, those are some of the best that I've been able to find. And
Mhm.
Marilyn Waite has a website where you can go and look at some of those top banks that she kind of rates and ranks based on how climate friendly they are, or what kind of positive impact they've got. There's just not enough of them, which is a total bummer. So part of it is getting them to get a larger and larger percentage of their loan portfolio that's out of fossil fuels or out of, you know climate negative things, and into the climate positive stuff like the solar loans, or electric vehicle loans. There are some banks that are now seeing like, oh yeah, we can actually offer a different product that's specifically for electric vehicles instead of just a normal auto loan. So part of it is getting them to get to pay more attention to it, to join the competition, the competitive market, to offer those loan products so that it's easier for people to get. And there might be some folks out there who have less awareness, but they've been a customer of XYZ Bank forever, and they're
Mhm.
looking to get an electric vehicle. If they go to their, whoever their customer relationship, person is, and ask, and that person just doesn't have anything special for them, then that's a missed opportunity. Where said they do say, oh, we do have this special if you're getting electric vehicle loan, where the rate's a little bit lower than our normal auto loans. That's great. So that's part of what we need to have happen. And then we also need more uh, financial institutions like Clean Energy Credit Union to start, or Climate First Bank to get started, and have them, um, show the merits of having that kind of narrower focus on
Mhm.
just this impact theme. Like, I mean, the regulators asked us when we got started, wait, if you focus only on clean energy loans, that's going to be concentration risk. And we said, well, no, it's not, because clean energy projects span all these different, loan types. You've got the electric vehicle loans, which is in an auto loan category. You can do,
Mhm.
mortgages from net zero energy homes, and there's your, there's your mortgage lending. And you could do green home improvements. Yes, and actually there's more asset classes, I think, than without it. So yeah, we would like to get some more pure play financial institutions to get started, or even could be subsidiaries. We have seen a few banks create subsidiaries that are gonna focus on clean energy, and that's fantastic too.
What's a topic that we didn't go deep in that you have been spending a lot of time thinking about, right? So I think what we talked about, and we can go deeper in those in the next few minutes, but like scaling up what you guys do seems like the number one thing that you're looking to do, both in terms of getting more money for clean energy credit unions so that you guys can do home mortgages, right? Like do these larger things and accept more money. Like I would love to put any money that I have, not that I have a ton, but like I'll put my savings in there, right? And like I'm sure you have a lot of people here that would love to do that. So definitely the scaling up on both sides seems like a super clear challenge that you're working on, that you're focused on. Is there anything that we didn't touch on that again is a challenge or something that you are just thinking through that or a call to action for the people in this group, but any of those
Yeah.
things that you want to sort of close out with?
No, I think we touched on, educating regulators, educating, banking professionals, and the CFOs of banks, and the commercial lending officers of banks, to get so they could create these products. Yeah, I think we touched on those. Just awareness, so people are aware there are places you can get better loans that are specifically catered to these projects, and awareness for depositors that, hey, maybe I didn't realize that my money, that's what it was doing in Bank of America, or at JP Morgan Chase. And, there's other places where I can go put it where it's going to do better good. So those are good things. Government getting involved and helping, that's been a big step in the right direction. And again, it's a municipal, state, and federal level. What else? I think that's pretty good. Um, yeah.
How can everyday people talk to regulators? Like there are public utility commission boards that I think have sort of outsized influence, but I don't even know if they would be involved in this sort of thing. Like, could an
It
everyday
pro-
person talk to regulators
not,
and say like, hey,
not as easily, right?
okay.
I think they're more contributing to it by, through their deposits or through, getting a loan. And yeah. And really what's really helping the regulators is just track record. We just need
Mhm.
more financial institutions with
Yeah.
more of clean energy loans in their portfolios performing well. And when they see that, it's data
Mhm.
driven. So all across all these different financial institutions and all these geographies and all these different, you know, um,
Mhm.
customer types, and it's wow, it's got that low of a default rate.
Yeah.
That's amazing. That's been really helping.
So my last question is, what if I don't know exactly how to say this, but like, are the returns enough for this to be for like a bank that's a normal bank, right? Not a nonprofit bank, to start something like this? And if so, would that actually be helpful? Because it would add competition.
Yes, it would. I think there is a natural challenge for bank ABC wants to get into clean
Mhm.
energy lending. Uh, they're creating a new loan product and they're going after a new market.
Mhm.
You can't just do that the snap of a finger and okay, I created the loan product. Where are all the customers? You still have to do some marketing. You have to do some advertising. You got to make sure you design the product properly. But there are classes out there that are free
Mhm.
for banking professionals and credit union professionals to go and learn about all these things and to learn it from, say, employees from Clean Energy Credit Union who have been doing it. Uh, and that's through, I think, the University of New Hampshire. And I can follow up with links to it. But that's a great example where they're able to learn that stuff. So they do need to learn how to roll it out
I think
successfully. Um, but yes, I mean the market is enormous, and there's data for how showing how big the market is, and then there's plenty of data showing how profitable it is based on how low the delinquency rates are. And something that Clean Edge Credit Union does, uh, like banks do. Banks sell a lot of their loans in the secondary market, right?
Mhm. Mhm.
Probably everybody knows someone, maybe it happened to you, where you get a mortgage, you bought a home, and then you got a letter, a month or two later saying, "Oh, your mortgage has been sold to, to somebody else," and that's where you need to send your monthly mortgage checks. I like how credit unions do it differently. They call it loan participations, where
Mhm.
Clean Edge Credit Union will get investors or will sell, say, up to 70% of a pool of clean energy loans to 10 other different credit unions. So we all kind of jointly share the
Mhm.
risk, and share the monthly payments that come in for a pool of clean energy loans. That's been one of the main ways in which we've gotten clean energy, other credit unions to learn about clean energy
Nice.
lending is by buying loan participations, getting some of them on their books and seeing how well they perform. But there's a lot more investors that could be doing that. And that data that they're all seeing is, wow, here's the interest rate that I'm getting, and here's the default rate. Um, these are making a fantastic margin,
Mhm.
better perhaps than many of the other loans that we have in our books, like the mortgages that and the normal auto loans that are the bread and butter for
Yeah.
for most banks and credit unions.
Yeah, I think that's fascinating. And not that, I mean, I want the credit unions to have the lower or be able to have the lower interest rates, right? But I like the idea of like maybe a big unlock is are those classes, right? Or those
Yep.
sort of trainings of
Yep.
traditional institutions. Okay. I see my time. Abel, you are the first one who has a question. Are you open to coming off mute and saying it live? And if you can go on video, I'll bring you up.
Yeah, thanks. I had two questions, sort of, what do you think has been behind the success for your low delinquency rates despite issuing those loans to low income clients? And then also, do you anticipate any impact on capital or regulations in the current administrations, and what are you doing to prepare for that?
So the first question, I think the primary reason is that clean energy loans, like I was mentioning earlier, are fundamentally different from all other loans because they save people money. If you get a better insulated house, or if you get a heat pump, that heat pump is going to use less electricity or less gas than a furnace would. It's going to cost you less than if you have a normal furnace that's burning gas. If you have solar panels on your roof, you're generating your own electricity, and therefore you don't need to buy as much electricity from the utility company. So on a month-to-month basis, your utility bills are lower. And usually, more often than not, the amount of savings on your utility bills exceeds your debt service. It exceeds the amount of your loan payment. So it can be cash flow positive to get a 20-year loan for a geothermal heat pump, or a 20-year loan for a solar system. And when it's cash flow positive, who, if someone were not to pay that bill, like say you have a low income family and they've got some tough decisions to make about which bills they're going to make and which bills they're going to be late on, and they're sitting at the kitchen table trying to make that decision, they're going to want to pay the solar loan bill because it's cash flow positive for them. If they were to stop paying that solar loan bill, then their system might be shut off, and then all of a sudden they're paying more in their utility bills than they were before. So that is a very concrete example of how these loans are not just less risky, but people are very positively motivated financially to keep making these loan payments, and that's the primary reason why the default rates are so low.
And do you have partnering organizations that are like companies that are contracted to offer solar installation for the clients, or are they doing this on their own? And if so, how do you ensure that the products that are being installed are of high quality and that can ensure sustained benefits for the clients?
That's a great question. I mentioned earlier that we're getting a lot of new electric vehicle companies saying, hey, can you add us to your approved list of cars that can be financed with one of your EV loans? Well, it's much easier to finance an EV loan when the car is manufactured by Ford or General Motors or Kia, because those are major car manufacturers and they've been around for a while, and we think they're going to be around to honor their warranties. That one's a lot easier, where we don't really have to be involved that much. But if it's a brand new EV company that we haven't heard of before, we might say, sorry, that's not eligible. The same thing can happen with someone installing a heat pump, a geothermal heat pump, or solar panels. We won't necessarily recommend companies to them, but we do have, like with solar, we have a registered dealer program where that solar company has to apply with us to get approved. We just want to make sure that they're going to be around. There've been a lot of solar installer bankruptcies lately, and we want to make sure that we do some basic due diligence on that solar company so that they're going to be around to honor a warranty 5 years from now, 10 years from now, 15 years from now with our 20-year loan, right? Because if that company goes bankrupt and something goes wrong and they can't get their solar system fixed 7 years from now, that might increase the chances that member of ours stops making their loan payment because, well, that hunk of crap's not working anymore anyway, and the company we hired to install it in the first place isn't around. So I think it depends on the technology, but yes, it does help reduce the risk if we are paying attention to the technology, the viability of the technology, and of the company that's selling it or installing it. And then, sorry, your second question was about capital and regulatory frameworks. Good question. And the Trump administration is already affecting things by freezing a lot of the funding that was coming from the Inflation Reduction Act. But I would say that's taking away a positive that the Inflation Reduction Act wasn't around 5 years ago. Marilyn Waite has had ideas with getting regulators to provide more favorable ratios and regulatory requirements as it relates to loans. Like, for example, if you have fossil fuel loans, we believe those are higher risk than most people think, because if you finance a coal-burning power plant, that technology is going to be potentially obsolete in 15 years from now before your loan has been paid off. So that's higher risk. Whereas if you're financing solar, it would say it's the opposite, and trying to help incentivize or deter banks and credit unions by the regulatory requirements that we put on them. I think that's maybe too deep of a wonky topic, but I don't think the Trump administration is going to be very helpful in this particular category. But hopefully, they're not going to do anything negative, negative in a regulatory arena. They're already doing something negative by freezing a lot of those IRA funds.
All right, thank you.
All right. Thank you, Abel. Adam, why don't we bring you up? You can ask one of your questions, and then we'll go to Paul quickly, and then hopefully we can answer your question way offline if we don't have time. But go ahead, Adam.
Skip my trading question because I think it gets too economic-y. Are you looking at any kind of standardized frameworks like the EU EV passport system when you're looking either at new stuff or even kind of standardized brands like Ford, Kia, when you're looking at new potential systems to bring into the loan platforms?
And sorry, I don't think I know what would you call it, the EU
EV passport.
EV passport? Yeah, I don't know what that is. Sorry, I'm embarrassed to say.
That's okay. I'll connect with you offline for that one.
Okay.
Okay, cool. We have a question from, I think, Paul, if you are able to go on video, or just, yeah, great.
Yeah, sorry, I'm in the middle of cooking dinner, so I'm a little grubby. Thank you. Really, really interesting presentation. I just had a question about whether you just work mostly with individual clients or do you work with target the multi-unit housing owners? Because a lot of those places are rental only, and so those folks who rent don't benefit from the benefits of clean energy. So how are you thinking about that space?
Yeah, so good point. You know, if renters may not have an incentive to make long-term investments, to green up or to make their rental dwelling more energy efficient when they might only be there year to year. And sometimes landlords don't have an incentive either because they're like, well, the utility bills aren't paid by me, they're paid by the renter. That is a big challenge. We've seen some municipalities try to provide incentives for landlords to do energy efficiency home improvements. And we know that because a lot of Clean Energy Credit Union's members are folks who own rental dwellings, and they're seeing good reason to do it. One of them is connecting the dots and saying, when there's competition and I'm trying to attract renters, if I can say that my dwelling is cheaper to live in and the utility bills are half of maybe a similar sized rental dwelling right down the street, I'm more likely to attract more renters and have more competition for people trying to rent. So I think most people get that when you explain it, but most landlords don't think about it unless you bring up that topic. So some of it's just education, getting awareness out there, and we've seen some municipalities having proactive marketing campaigns to do that kind of thing. If not even just provide incentives, like we'll give you rebates for LED lights that you put into your home and for insulation that you put in your home. But in terms of what Clean Energy Credit Union is doing, nothing like that proactive, but more just making it easier and accessible for someone to get our products. Now, a renter might have a hard time, getting a loan from us to put solar panels on a home that they're renting. So we haven't yet, figured that out. But sometimes that'll start a conversation. They'll bring their landlord into the mix, and then sometimes we can convince the landlord that it's a great idea for them to get the loan instead of the renter because it's their house.
Great, thank you.
Then Mike, I think you can take us home.
Hi, Blake. Hopefully you can hear me all right. All right,
Yep.
Awesome. I'm kind of curious on sort of the community development piece. So you've described a lot for like renters and homeowners, but for community organizations, do you have some examples of how you all have worked with some of those? Because I'm personally kind of interested in how like groups of us come together around
Yep.
chunks of things that we own, but it's not like one discrete object.
Yep. So part of the issue is that Clean Energy Credit Union only provides consumer loans right now. We don't yet provide organization loans, like loans to nonprofits and loans to businesses. That's where we want to go next. If we can get the capital and the support to continue growing, we do want to provide those types of loans. And there are groups out there that are providing them. So say a house of worship wants to put solar panels, on the mosque or the temple or the church, schools, other nonprofits, hospitals. Solar is just as beneficial for them, especially now that the tax credit, you don't have to have a tax liability. Like nonprofits don't have a tax liability. So there's a 30% tax credit for solar and for geothermal heat pumps. In the past, a nonprofit wasn't able to take advantage of that. Now they can. There's a way for them to get a cash refund in lieu of taking the tax credit on their tax returns because they don't have a tax liability. So when we do, and then hopefully it's going to be in the next year or two, start providing loans to nonprofits and to businesses, then all of a sudden we're talking about a much easier way to provide loans for these to facilitate these projects for community organizations. But there's also a way for communities to form co-ops, like Solar United Neighbors is one of our partners. They it's not about installing solar on a community organization, but they're getting a whole lot of residents together to do group purchasing of solar so they can get better pricing on it because it's a bulk purchase. So that's one example, Solar United Neighbors, of something like that where that's happening. I'm trying to think of what else. We do work with a lot of nonprofits that just help to particularly focus on low income constituents of theirs, usually residents in a certain geography, to make it easier or to get financial coaching or to get help with repairing something on their credit report so that they can get loans to buy an electric vehicle at a lower interest rate than they'd otherwise be able to get, or something like that. So there are a lot of nonprofits and a lot of community organizations that are doing that type of work, and I can try to put another example in the chat for that. So sorry, those are the only examples that are immediately coming to mind.
No, those are great. And I would love to follow up once you've got the story for nonprofits too, because I've got two that are looking to do just that.
That'd be great.
Thank you.
Cool. Okay, thank you. I know, John, you have your hand up, and then Brian, you had a question in the chat, and Micah, you're going to follow up at some point. I think there's some follow-up here, Blake, so I don't want to take any more time and sort of end at the hour. But John, send me an email. Brian, I'll send that to you, Blake. And if there's anything else that anyone asks about or any resources you share, I'll just make sure everyone gets that. Just thank you. This was amazing. If anyone wants to go off mute and say thank you, you're welcome to. But thanks again, Blake, for joining us.
Yeah, thanks for being interested in what we're doing.
Thank you so much.
Thank
Joining us,
you.
Blake.
Thank
Thanks
you.
for what you're doing.
Thanks.
Bye, everyone.